Morning. Welcome to One Financial Markets Morning Commentary. I'm Andrew Johnston. What we're going to go over today is what happened over the weekend. Nothing of note. However, Trump is starting to get annoyed at the Chinese over Korea. He's sent a couple of bombers to do a flyby over there. So, all very interesting times. Got to watch that very closely because the guy is insane and can do anything at any moment. These flybys will just infuriate Kim Jong-un. China doesn't want to get involved in stuff like this. It's more happy about trying to take over the world by buying up US debt rather than having to go to war with nuclear war with these countries. So it's all something going on in the background, but something also we know that we have to be very, very aware of. Things that had a Friday finish off. Well, Friday we had 130s, personal consumption in the US, all very, very flat and not really doing anything much. As I said on the Friday morning commentary, that there was potential for portfolio managers, hedge fund managers, asset managers, all to start resquaring their books because of the index movements over the month. And as we saw towards the end of the day, on this chart here in front of us, Euro started to pick up towards the end. This I put completely down to end of month book squaring, as there was no information in the market to say otherwise. Looking ahead today, we have CPI at this morning at around 10 o'clock, which is European CPI. So this will be a measure of the inflation in the Eurozone currently. The forecast 1.3, previous 1.3. So what we're looking for here is if it's a higher number in that the prices are going up in the Eurozone, then this will mean that the currency, euro currency, should go up, because if there's higher inflation in a country or a zone or whatever you want to call it, then the government or the ECB might have to raise rates in order to stabilise that price, depending on how far it goes. So at the moment, the forecast is 1.3, the previous is 1.3, it's supposed to be bang in line, nothing's supposed to have changed. If we have a 1.5 or a 1.6, we can look for the euro to appreciate, because then the ECB starts to think about raising rates in order to stabilise the inflation, prices rising because people can't afford it, and likewise on the downside. So we look to this figure today for certainly just for some market movement, because apart from that, there's really nothing going on. It is the end of the month. There might be some more book squaring today, but we do have the summer holidays as always. It's always an excuse us FX traders use in order to have light liquidity and basically not to do anything. So to sit here with our feet up is because it's summer holiday. I'm only joking, of course. We're gonna wait for these figures today. We've got some half ones in the States. No, we don't have half ones today. No, today we have 3 o'clock pending home sales. Once again, I don't think it have any relevance whatsoever at this time in conjuncture, because no one's paying attention to figures. It's just the FX market is taking the control at the moment, and I don't think it's really got it right. So it could be quite scary how things pan out here. I'm just looking at some other products that we offer. Gold had a lovely move up on the Friday, just based on the dollar move down. And I think a lot of people going into the weekend just wanting to have a bit of gold as protection against the Trump factor and whatever he can potentially do. Like I've shown before in the charts, we're now in this lovely sideways consolidation range, and we should be looking at 1290 in the not too distant future. But I mean, if you're going to look at any chart and show people how to trade, look at this, it's absolutely perfect at the moment in terms of support and resistance. So we have to keep with the consensus that we're going to go back up to 1290, and judging by all the stuff that's going in the news currently, that's pretty much going to happen in my personal view. Other things to look at, Dow once again just keeps going up, and we've said this before as I discussed in the other commentary, that this will not stop. He wants the dollar down. He wants Trump. He wants the dollar down. He wants people to invest in the US. He's already boasting about how well he's done since the election in terms of the equity market. But with everything, the sell-off is always going to be much more aggressive than the climb up there. So we have to be very wary of things like that. And just, there's got to be a biting point where people start to take P&L, or people to say that enough's enough. But at the moment, with the dollar weakness and people chasing for yield, equities are the place to be. So any other charts to look at? Well, we have got an interesting one, which is I will talk about later on the week, but we have to be aware of Bank of England announcing their interest rate decision on Thursday. Here's sterling currently at this juncture. Not really done much here, but we can see, like I said before, we have slightly come up to an upwards trend. We will be doing more analysis on this during the week, Tuesday, Wednesday. And just so that we have a good idea of how sterling has been developing over the last couple of months, or in fact for the last 6 months of this year since the Brexit announcement. But in terms of that, there's not much really else to go over. But I will see you back tomorrow in the front lines, and have a good trading day. Bye.